Dave Ramsey doubles down on his thoughts on the real estate market and it not going down.
So I don't think you're going to see house prices go down.
In fact, his newest video says it is clear, the data is clear on the real estate market. So let's go ahead and break down what he's saying in this video from the perspective of a real estate agent and go over the data that he is presenting so that we can make sense of what he's saying. Before we jump into the video, go ahead and subscribe if you find it entertaining, useful, helpful at all. Go ahead and like this video. If you have any comments at all, post them down in the comment section down below. Our information is down there as well if you have any questions for us, specifically on the Phoenix real estate market. We're more than happy to help. Let's get into it. So basically, I'm gonna play this video and then kind of react to it as we go along. I'm not going to play the entire video, just kind of the snippets that kind of pertain to what we're talking about here. Ramsey.
If you're looking to sell your house right now, there's a lot to think about. It's crazy out there in the real estate world, and people are buying houses. Prices are not going down. We are seeing some individual markets that are suffering from individual maladies. For instance, some of the markets in Houston around the energy and the oil problems that Biden has caused, the energy world, we're seeing some of those prices go down. But overall, the American real estate economy is going up.
So quick just thing in here is he's just saying some markets have specific things going on with them. He's saying Houston specifically with these oil, apparently there's an oil issue or something where it's causing real estate prices to go down, and that's kind of subject to a localized market. And that's just basically factors within that localized market that you just can't control. So say even in a very, very hyper-localized market, say it's a neighborhood and a factory goes in and, that causes people to be like, hey, I don't want to live right next to a factory, those prices are going to come down. So it's kind of, that's a hyper localized example, but that's what he's talking about in that.
Because there continues to be a shortage of housing as compared to the demand. If you're selling a house, though, you are going to see with this bear market, with these increasing interest rates, with us heading into a recession, you are going to see a more normalized selling process. In most of my 40 years of fooling with real estate, I've seen about a 90-day period of time to sell a house.
Okay, let's stop there. So what he's saying right now, or a lot of buyers right now, specifically millennial buyers, younger buyers that are getting into it for the first time, have only experienced a crazy seller's market as a real estate market. So as we develop and start to turn a bit, people are expecting the worst, right? That's why these videos are getting views from Dave Ramsey, is because it's kind of the opposite of what consumers want to hear. Consumers want to hear prices are going to come down so that we can afford, right? But what he is saying is, hey, this market has been so crazy. It's been, and he'll get into it a little bit later, but it's almost like an auction and trying to buy a house. Really, in reality, in the past, it's been about a 90 days on market for a home. And right now we're still sitting around like 33 days on market. So that's kind of what he's saying there.
I've never seen anything like the last little bit where you would put a house on the market and 82 people would make an offer in 7 hours. Okay? That is not normal. For those of you that have been living in that world, it's not a normal world. And so that world hopefully is gone. It's not healthy. It's not good for the market. It's crazy. It's weird. So if you're going to sell a house, you need a good real estate agent. Now, I'll walk you through the process and to work with the buyers that are in the market, and there are still buyers in the market, to get them into the house.
In fact, there's specifically in the Phoenix market, there's over 2 buyers for every listing still. So
it's not amateur hour out there, right?
Yeah, let me ask you a question regarding this, because this is wise to unpack for folks. So we are going to see now moving back to normalcy is what I'm hearing you say on the amount of time to sell, but it doesn't mean that you need to panic and lower your price just because it's going to take longer. And that's why we want you with a pro who can go, hey, relax.
Yeah.
You didn't sell it in 5 days. Doesn't mean you need to drop it.
Yeah. I mean, I talked to a guy on the air yesterday. He's had the house on the market for 2 weeks and then got an offer and he's panicking.
Yeah.
Because everybody's like, oh God, because we're used to being a seller.
Right.
That you're putting a house on the market is actually an auction. And that's not happening anymore.
And so quickly, I want to get into some data that Redfin came out with. Redfin, again, is a very data centered company, specifically within the real estate market. And then here's just a slide that I want to put up on the screen here. You can see that Phoenix is still very competitive according to Redfin, 74 on their 0 to 100 scale. Sale to list price still 102.3, which is down year over year, but still 102.3. Home sold over list price or above list price is going to be 58.3%, so still a majority of homes. And then this is what I wanted to get into, homes with price drops. And so people are pointing to this number saying, hey, house prices are finally coming down. In reality, that does not mean house prices are coming down. And so what this means is someone is pricing it strong. Say that house is, market value is $400,000. They're saying, oh, I just saw a year of people bidding and getting out of control. I'm going to list it at 440, 10% more, get as much money as I can. Now that the market is kind of stabilizing, buyers are less likely to just get in and buy and do whatever they can to get into a house. They're actually doing their due diligence on houses, things like that, actually running comps. That 440 price they don't want to pay. And there are brokerages out there, specifically these iBuyer brokerages, that buy up houses and that just have houses. They have houses that have sat on the market for 3-4 months. Still, they're on the market and they haven't sold because they are, overpricing. And so that's what that means. It doesn't mean that the average or the median price for that city or for that market is coming down. What it means is someone's listed strong and they need to drop the price so that it can be actually a market value house to get sold.
That's not going to happen in a 6% interest rate environment, and in the middle of a recession. And a lot of companies are laying off, and so it's just not going to happen. But do we sell houses in that kind of a market? We have always. As a matter of fact, that is a normal market to sell houses in. I've sold houses in recession, and my whole life, and as a real estate person, years past. And we sold them in 1982 in a 17% interest rate environment. People were buying houses. Not as many as buy at 3, but it's not, And so, if you're going to put your house on the market, you need to get a really good agent. And if you're going to buy a house, you need to get a really good agent. It's a good time to do both. And there's a lot of people panicking and freaking out. There's a lot of fear out there.
Yeah. Are you hearing people say, is it dumb, Dave, to pay 6% when 6% is, if you look at historical rates, it's not like a crazy rate.
Oh, you're talking about the interest rate?
Yeah. Is
historically, it's not. Here's the thing. Get the house.
Right.
If rates go down, refinance.
There you go. Okay. I like it.
But you're not going to.
So again, Dave is just saying, prices are likely not going to come down because of how small the actual supply was for so long. And he's saying, it's a good time to buy or sell right now, which is kind of an interesting statement. And what he means by that is it's a good time to sell because you're taking advantage of still a stronger seller's market as we kind of shift towards more of a normal market. And it's still a good time to buy because prices will continue to go up just at a more slow rate. And with that being said, I kind of just wanted to get into this chart specifically here. And what this is it basically shows the median home price within the past, basically since 2009. So since it bottomed out, and we have seen it go from $208,400 all the way to $428,700, and that's the median sales price for the United States. So that's all markets within the United States. With that being said, what that comes out to is about 105.7% increase over 13 years, or 8.1 increase per year since 2009. That obviously doesn't just happen, perfectly like that, and so I'll go ahead and show this chart. And so from 2009 to 2010, these are all quarter ones prices. We had a 6.95% increase. From 10 to 11, 1.8% increase. 11 to 12, 5.1, 12 to 13, 8.4, 13 to 14, 6.5, 14 to 15, 5.1, 15 to 16, 3.7, 16 to 17, 4.4. Continues all the way to, and then an interesting fact is 18 to 19, we actually had a 5.7% decrease because that was a more, that market was more healthy. Therefore, when they raised interest rates and we actually had a similar number of buyers to sellers, then what happens is prices drop. When you have an external factor such as a very, very low supply, things like raising rates, does affect that, just not to the amount that it did in 18 to 19. And so, it goes on 19 to 20, 5.1% increase, 20 to 21, 12.4% increase year over year, and then 21 to 22, 15.9. So he's basically saying, hey, it's going to go back to a kind of a normal, maybe 5%. Maybe, we have years like 10 to 11, a 1.8% increase. Things like that, where it's more of a normal increase year over year rather than these huge, in the Phoenix market last year was a almost 30%, if not more, year over year increase. So that's kind of what he's saying within that piece of data.
The house is not going to go down. And so, oh yeah, house prices are going to crash, Ramsey. You don't know what you're talking about. Honey, I have this thing called perspective. I've got a long view.
Come on.
And let me tell you, hope comes from having long ball.
Yeah.
Where you go into freak out mode and your brain starts melting and running out your ears is because you're thinking short.
That's right.
And and I understand even intelligent people become afraid, and they lose their intelligence when they become afraid. But you're not looking at facts, you're not looking at data, and you're just freaking out because a lot of people that are very, very bright, this is their first downturn.
That's right.
I mean, 2008 was the last one.
Think about it, a lot of young people have never even seen a market with 6% interest rate. They don't even know what it's like.
We never even heard the word recession.
Right.
Or never seen a slow real estate market, a medium real estate market. It's always been white hot. Because the last time, this is 2007, we had 2.4 million new housing starts.
Wow.
This year we'll have 1.4.
Yeah.
We have a shortage of housing.
Big time.
And supply is just not there. So there's more buyers chasing fewer sellers still.
That's correct.
But just not at the auction level.
2 for everyone listing right now in Phoenix.
I saw on the news today, the CEO of Coldwell Banker said that if there were 5 to 6 million new homes built right now, that would get us at what he would say a normal level of supply.
Exactly.
So that's how
when
far
there's that
behind we
much
are.
shortage, it's impossible to deduce in a logical mind that has a long track record and is looking at data and is not working on feelings that the housing market's going to crash. Hey, the guy's right. There's a 5 million shortfall of housing units. The number of houses on the market the last 3 years is 50% of the number of houses on the market in 2007, 8, and 9.
So what Dave is saying here is with those number of houses being short with an inventory, it is, Dave's words, impossible for the market to crash. And basically, he's trying to say that there's an external force right now within the market that's causing the market to shift. And what is that external force? Well, it's the Fed. It's making money more expensive so that people will slow down their spending, right? That's the external force. Yet we still have a 5 million unit shortfall here that we don't have built and that we're in a deficit of. So this external force is now making the market balance out a little bit, come back to balance. But once the Fed gets to what they're wanting to do, they want to get down to 2% inflation and a strong labor market. Once they get there, that external force is going to go away and house prices are going to, maybe slow down during that time, and then they're going to go right back up. And so that's kind of Dave's reasoning behind his, huge statements of it's impossible for the market to crash. Dave Ramsey doubling down on his thoughts on the real estate market because he sees the indicators behind it as well as just the supply and the demand numbers. Could he be wrong? He definitely could be wrong. No one knows what the market's going to be like in a year, right? The market could be completely different one way or the other. But Dave has been around specifically buying and selling real estate himself for a couple of decades, and he knows what it's like to compare supply and demand. He knows basic economics. He's a money guy, he's a financial guy, he's a financial advisor, and so he is a legitimate source of knowledge. Doesn't mean he's going to be right, but he is doubling down on his thoughts. He's basically saying, hey, house pricing is not going to be any less expensive than it is right now in the next 5 years. So might as well buy right now if you can afford it and if it fits within your monthly budget and within your personal finance goals. He says, go ahead and do it. he's going to come out with a few more videos having to do with the housing market specifically, and we'll go ahead and follow up with that. Thank you so much for watching. If you have any questions, go ahead and put them in the comment section down below. If you like the video, go ahead and subscribe and like the video. We very much appreciate it. My name is Rhodes with Team Sierra Realty, where Arizona real estate is seen.